Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 20th of February 2020. So, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. We'll have a look at a few interesting setups maybe as well. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, before we jump in, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our videos, and of course our JFD website, and specifically our JFD Bank research page, which we update on a daily basis. So I believe you can find some useful information there, guys. So feel free to visit us here on jfdbank.com and click on the research tab right here. Now then, let's jump into the charts. Now the first one on the section here is the CAC 40. Now I talked about this index this morning, and I was telling you guys to keep a close eye on this barrier, this key barrier near the 6,110 territory. So we came close to kind of pushing above it, but kind of still got held by this whole area here, and you saw we can see that the index is kind of drifting a little bit lower here. So in a way, for now the index is in the red for today, but again, don't get me wrong, even if it changes, well, if it stays here until the close, we'll keep an eye on the US indices, and we'll see if the US markets can push the cash indices to the upside here, on the European ones, of course, and the rest and the Asian ones, of course. But for now, looking at this picture, the technical picture on the CAC 40, for now we're waiting for a clear break above the 6,110 zone before examining higher levels, because only then we will be able to consider that option, because this would confirm a forthcoming higher high, and could push the index a little bit higher towards the 6,168 zone. And let me just show you what that level is. That level basically is the highest point here of June of 2007. So this is the crash that we had here in 2007 and 8, and this was the level that the index managed to reach before crashing all the way lower. Of course, it's not the all-time high for this index. The area around the 6,945 zone, that's kind of the one to watch for an all-time high, but we're quite far from that yet. So let's see first what it wants to do with the 6,110 zone, which it keeps on which door it keeps knocking on. But if we do manage to break that, then yes, aim for higher levels. In terms of the downside here, again, with the downsides, of course, ideally we would prefer to see a drop below the 6,000 zone before considering lower levels, but we could start looking at lower areas if we get a drop below the 6,040 area, so which is the low of the 18th of February, and then we could aim for slightly lower areas. But as I said, the level that we're keeping a close eye on for the downside is the area around the 6,000 mark, and I could drop below this could lead towards further declines. Nasdaq 100. So looking at this index, and we can see that the index closed yesterday in the positive territory. Of course, this kind of gives hope for the bulls a little bit, but looking at the cash index right now and where it is balancing at, and it's roughly sitting around the 9,694 zone. So basically it's somewhere 9,694 is roughly around here, guys. So basically just slightly below the yesterday's close, but nevertheless still above this little area, this little obstacle near the 9,636. In a way, even if it drops below this, still there could be a possibility for the bulls to step in and drive this one higher. So that's why, as you can see, we do have our downside kind of scenario from here, from the 9,373. But of course, don't get me wrong, this is quite a big a move to miss out for. So what we could do here is, from the very short-term perspective, and let me just jump into a 1-hour chart. If we get a drop below the 6,936 zone, then, well, we could consider a potential slide here. The only problem, of course, have your stop loss in place, because again, this could reverse very sharply back to the upside. Yep, for now, in general, for now it's kind of more to the upside. The main scenario is to the upside, but of course you could try to capture a few of these swings lower here, but be very careful with that, because, as I said, for now everything's kind of looking quite positive, unless the headlines start coming out negative around the or even, let's say, even worse, even more to the worst side on around the coronavirus. So something to keep an eye on. So yep, for now this index is vulnerable to any bad news, or in general all the indices are vulnerable to any bad news surrounding the coronavirus. But if then let's say the day calms down a little bit, or the information from there calms down a little bit, then yes, we see the upside trend being resumed, and a further push higher. But again, for now, guys, from the very technical picture, if we see a drop below this 9,636 territory, we may consider a bit of declines here, but we'll be very careful and very cautious in case this suddenly reverses back to the upside. Gold. So gold, I talked about this one, and what I was telling you guys to keep a close eye on this barrier, the barrier near the highest point of January, which was around the 1611, 1612. You can see that we did hit that area first initially, but then the price kind of declined back down, and yep, the bulls stepped in and kind of drove this one above the 612, 611 territory. So for now, what we could do here is keep your eyes on today's close. If we do see a daily close above this barrier, then, well, I mean, further acceleration to the upside is possible. Let me just jump into a daily chart, by the way. Now, again, this is what I'm talking about. So if we do see a close above this barrier, then yep, a further move higher could still be possible. Trying to find a good resistance level here. Now, this is where we need to go back a bit into history. So basically, if I jump into a weekly chart, you can see that right now we are at a very interesting spot here. That's basically around the high of March 2013, and this is going to be a very strong area of resistance. So, but if that gets overcome, then yep, it could continue pushing further north towards the highs of February 2013, and yep, levels like the 1687 could be met, or even above that, the 1700 zone. So for now, of course, keep your eyes on the upside. It is more bullish than bearish for now, especially if it remains above this 1611, 1612 zone. DXY, very quickly on this. So I've talked about the dollar index this week, and I was telling you guys to keep a close eye on this little high of the highest point of October, or in other words, the highest point of 2019, near the 99.67 zone. So as you can see today, we've managed to not only break again this barrier, because we did that yesterday, but for now it continues to trade above this barrier. So basically, all this is kind of creating this nice positive atmosphere for a further move higher. The only thing is, of course, also keep your eyes on the daily chart, because if suddenly what we get a drop below this and we see the daily candle closing below this area, below this barrier, then, well, I mean, there could be a bit of room for a small correction, maybe something to consider, because even looking at this daily chart, we are quite overstretched here to the upside, and as you can see by our oscillators here, the RSI, the MACD, we are kind of at the tops here. Don't get me wrong, it doesn't mean that this is where it's going to start reversing now, because it could continue being here above this, for example, above this 70 territory, and on the RSI, and it could continue rising as well. So that's why we've seen that happening many times, so that's why don't get caught up in that. For now, mainly focus on, right now, for today, focus on the 99.67 zone. If we do get a close below this, then yep, we will consider a potential maybe correction. But if it stays above this, then, well, I mean, a bit more upside could be possible. GBPCAD. Now, I've looked at GBPCAD this morning, and what I was saying, that guys, that in a way, given that we have already dropped below the 1.7111 zone, we could see a bit of a correction, and then another push lower, and you can see that currently the rate is resting near this one of our targets, near the 1.7035 zone. It is currently getting a hold up here. Let's see if it can actually rebound and maybe go back up here and then sell off again. If this, of course, stays below this, and if we see at least a 4-hour candle close below this area, below the 1.7035, then, well, I mean, further declines could be possible, where we will aim for of course, that psychological 170 area, or all the way here towards the low of the 20th of January near the 1.6939 zone. Again, keep your eyes on that one. For now, this is all looking quite bearish. The pound is on the weaker side today, although we did get some not bad data from UK today around their retail sales, where the figures beat expectations. Still we can see that the that's not enough for the for the GBP traders, because the whole Brexit issue is weighing in still on this currency. So and of course the stronger Canadian dollar, that's what's pushing this pair lower. For now, we are more bearish than bullish. For us to start considering the upside, we would like to see a pushback above the 1.7181 zone, and only then we'll target some higher levels. GBPUSD. GBPUSD, so I haven't looked at this one for quite a while, but as you can see, it's now breaking this key area of support of ours, and let me just put this highlighted territory right here. So this area here is roughly around the 1.2878 zone, and that's basically near the low of the 29th of November. And also you can see that back in the beginning of February, this area was also tested, which also acted as a fantastic area of support. But today we are seeing a strong move lower. We are seeing a 4-hour candle close below this, so we did get a correction where we've tested this level from underneath, but as you can see, the bulls it seems that the bulls have not enough steam to kind of lift this one above it. Of course, the day is not finished. Let's continue observing this one, but for now we're more bearish than bullish, and in a way, if it stays below this 1.2878 zone, then the next target for us to consider is going to be the low of the 22nd of November, and that's roughly around the 1.2820 zone. So something to keep an eye on, guys. Of course, don't get me wrong, we could end up going all the way here, maybe towards the lowest point of November of last year, and that's approximately around the 1.2768. But again, let's go step by step on this one. First, let's target the 1.2821 zone. That's, like I said, that's the low of the 22nd of November. If it holds, we could see maybe a small rebound from here, but then we'll reevaluate everything again at that point. EURJPY. Now, EURJPY, it continues to explode to the upside. So it started off yesterday, and today we see a continuation move here to the upside. It managed to break as well now the 121.03 level, which was a good area of resistance previously, but now, as you can see, it kind of got violated. So after the pair kind of moved around here a little bit, after it found some resistance near the 200 EMA on the 4-hour chart here, it did retrace a little bit, but stayed above this 120.14 zone, which previously acted as a good area of resistance. Now it took the role of support, and we can see that the EURJPY continues to explode here, and is pushing currently above this 121.03 level. Now keep your eyes on today. If by any chance we see this one reversing sharply back to the downside and staying below this 121.03, then we may kind of target a bit of correction here, but for now, looking at this picture, you can see that the pair continues to rise, and the next level we're keeping an eye on, of course, is the 121.36. Previously acted as a good area of support, especially on the 9th of January, and excuse me, also acted as a good intraday swing low on the 23rd of January. So now could play the role of a bit of a resistance role here, which if holds we could see then maybe the pair retracing back down. But for now, guys, don't get me wrong, we are quite steep here. We had a quite steep move already, so at some point we should be getting a bit of correction. The only question here is from where. Now, one of the levels that we're considering, as I said, this 121.36. If we see a hold up around here, we may consider this little correction first, and then before another leg of buying. And finally, EURUSD. Oh, by the way, with the EURJPY, if suddenly by any chance it starts dropping all the way here below the 200 EMA and below the 120.140 zone, then, well, I mean, this is where we will aim for a bit of downside, and we'll aim for the current lowest point of February, and that's roughly around the 118.43 zone. So keep your eyes on that one. And finally, as I said, EURUSD. So this is what I talked about this morning. Basically, given the fact that we have kind of violated this little downside line, it did try to make its way below this 1.0777 zone. I talked about this level previously a lot, and you can review the previous videos as well, and where I was even especially this morning's video where I've looked at this area. But basically you can see that this area held nicely. We had a nice reversal and push higher, where now the pair is flirting with the 1.0815 zone. I talked about this level here this morning. I was saying that if we get a nice good strong push above this, then we may consider a bit of a correction here to the upside. So of course, for us to get a little bit more comfortable with higher levels, we need to see a push above this level here, the 1.0878. that's the lowest point of 2019. But again, up until here, we could aim for this area, for this 1.0878. But in this case, guys, have a tight stop loss, because this could reverse easily back to the downside. And for us now, in order to consider lower areas, we would like to see a drop below this 1.0777 area before examining further declines, because here right now, guys, this move lower below the 1.0777 would confirm a forthcoming lower low, and yep, more bears could start joining in. But for now it seems that it's trying to go for a bit of correction. Let's see if it can do that. If we draw a quick Fibonacci retracement here, let me just put this one on the chart. And if we draw this one here, you can see that yes, we could see a push further north. We could see a test maybe of this little area near the 1.0850. That's the 23.6% retracement on the Fibonacci. But if that's not enough for the bulls, we could see this one rising further north. For now, yes, we are going to be aiming for a bit of correction, especially if it stays above this 1.0815 zone. So keep your eyes on that one, guys. Right, I hope you found it useful, guys. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.